Welcome back. Shares of Snap are lower this morning. Take a look, down almost 8% following disappointing third quarter results. The parent company of Snapchat reported a big revenue miss, with daily active users also coming in lower than expected. The stock has since recovered slightly from an even bigger sell-off after the company announced that China's Tencent purchased a large stake in the company, buying more than 145 million shares. Joining us right now to talk more about stocks and investing today is Wells Fargo Investment Institute head global market strategist Paul Christopher. Paul, good to see you.
Thank you.
Thanks
nice
so
to be
much
back.
for joining us. Before we get to specific names like Snap, let's talk about this market, up $5.5 trillion from Election Day.
Fabulous.
Would you put new money to work in stocks today?
Yes, we would, but we would focus on paying more attention to risk and reward. Going forward, we like cyclical sectors, healthcare, financials better than energy, staples, and utilities. That's how we would do it.
1 year ago, I was talking about the markets and the economy, and what I was focused on in expecting a pretty good rally in stocks was President Trump, then candidate Trump's policies, in particular his tax policy. It is 1 year ago today that the president obviously was named into office. Listen to this. I would predict to you, Brett, that this ultimately will be a huge buying opportunity, because when you look at both candidates' economic plans, on the Trump side, he wants to lower taxes and roll back regulations. Regulation has been the one barrier for small business and large business, by the way, in terms of growth. Economic growth is the priority. That's what this country needs right now. That's what will be positive for the markets. And I think ultimately people will view this major sell-off tomorrow as a huge buying opportunity because of his policies. He's really focused on rolling back the regulations. That's going to be hugely positive. I think it is going to lead to economic growth. That's going to help the stock market. If we see a decline today in the market, I would be buying that market with both hands. I'm just saying, because you're talking about a good economic plan. Wow, I love when I'm right. Oh, goodness. Thank you so much. So markets have been on a tear. This is the least regulatory president, I think, in a long time. He's cut back regulations by 30%. Is that part of this? What's behind this? Or is this all anticipation about this tax plan?
No, I don't think it is.
Which I have issues with.
Yeah, it is not anticipation. It's not fully priced in. People are still suspicious. But you're absolutely right. There's been a lot of deregulation that's gone on behind the scenes, executive orders and instructions to regulatory agencies. That's helped a lot. But let's face it, since mid-year, the economy has really picked up momentum as well. And I think that's a big part of it, too.
But isn't it picking up momentum? Corporations are now spending more money because they're looking at lower regulations. They're loosening the purse strings. I mean, it's all connected.
It's all connected, but there's a certain amount of recovery that was already in train, especially in capital spending.
So what sector are you most excited about in terms of, what about the technology sector? And the other one didn't hear you mention, I think, was housing. How do you feel about housing?
So I'll start with housing. Housing is in mid-cycle. We think there are some low inventory problems that have helped boost housing price inflation. But basically, affordability is still quite right in the middle of its range where it needs to be. We think builders will increase their building going forward. That will moderate price gains. Housing has further to go and will support this economy. In terms of tech, it's been 40% of the stock market's gains this year. It's 25% or so of the total S&P market cap, and we think it has a good prospect, good prospects into the future. But having said that, the earnings comparables year over year get a little less favorable going forward. We think tech spending might slow a bit in the new year, especially globally, and there's some risks on the horizon, especially if U.S. policy turns more towards trade protectionism or limiting visas of talented IT people.
What about the tax plan, Dagan? Can we talk about this story in the Journal this morning calling it uneven? Actually, I think that's a really good word for it, this tax plan, because it is uneven. A lot of people are getting a tax cut. A lot of people are getting a tax increase.
The Republicans need to revise their talking points and stop saying that everybody gets a tax cut. If you look between $75,000 and $100,000 annually, if that's what you make, 11% of people are going to get, in that income group, are going to get a tax increase. If you look at people making more than $1 million, roughly a quarter of people are going to get a tax increase. And it's a morass. That's the issue, is the Republicans, I'll say it again, gave in to the the class warfare language of the Democrats. Being rich is evil. The wealthier people get a tax cut, and in a way, it's not a tax reform at all. It even complicates the tax code. That these changes that raise taxes on some individuals, they're hidden in there. It's complicated.
Because it depends on where you live. It depends on if you have kids or not. It depends on how you made your money.
Right. Because of what they're doing to blue states with the state and local tax deduction. And also, even on the corporate side, you've got that 20% excise tax that applies to some transfers of, say, intellectual property for corporations. Again, that's also a hidden, sneaky tax increase for some companies.
Laura Ingraham, I think, was the one that was interviewing Paul Ryan. And the first answer he gave was, hey, look, if it was up to me, I'd just do a flat tax. And all of us were sitting there thinking, why didn't we do that? Why didn't we try it?
Why didn't you do a flat tax? That's what you wanted to do. Why
don't I do it? It was very frustrating to hear the speaker say that's what I would have done, but we didn't even come close to that.
You think this passes?
Yes, we do. We'll put 2-to-1 odds, we think, on the passage of a tax cut plan going forward. No question, we think you're right. There's some cross currents, especially in the individual side. But in our calculations, we really have focused on the prospect for earnings improvement on some of those corporate tax parameters going forward. That expensing of capital could be a big one.
You know what? It is so messed up on the individual side. It smells so bad, and it's such a morass. It's almost like they're trying to blow it up and then just get through the corporate tax reform and the corporate tax cuts that they almost want it. Look, it's so badly written. It's almost as if this leadership wants it to fail.
Well, I mean, we got to wait on the Senate. And we'll see what the Senate comes out with. They decided to just start their own, right? Like they did on health care. Here
they are in markup in the House. And every day yesterday I heard Senator Tim Scott saying, well, don't worry, we're going to do our own thing. Yesterday, Ted Cruz went out and said the SALT provision, the state and local tax, we're not going for that.
And Darrell Issa said no to that.
And Darrell Issa said he's out. But you had senators on a daily basis saying, oh, don't worry about it. We're going to do our own thing anyway. And they're poised to introduce their own plan later this week.
Well, but the Republicans in the House opened the door for it because this is the equivalent of forcing somebody to eat Marmite. It's disgusting.
Hey, I like Marmite, Dagan.
I'm sure
you do. God.
Yeah.
All right, we will leave it there. Paul, thank you very much.
Thank you very much.
Paul Christopher joining us there.